Today I'm going to be reviewing another trader on copy trade on BitGet, so let's dive right into it. And that, of course, I'm the most open-minded investor slash NFT artist on YouTube
with a diverse appetite for risky asset classes ranging between shopping centers and shitcoins, but not government bonds, creating contact-led, family-friendly, cookie-accepting, cat-free, technical and specialized tutorials and guidelines to harness the generational wealth transfer found in crypto trends. And last, as a believer of Jesus Christ and a fan of the Arabian, an extremely well-educated and multilingual Korean, but with hair naturally curlier than the average Asian male and highly coveted by many moms and daughters, also known as Humble Kim.
And today we're diving into you at naver.com. This guy's pretty interesting. He's super high frequency. However, it is stable and is based on more on short term. We're gonna dive into how well he's been trading in the past and whether this is somebody that you should be trading or not. So let's have a look at his last 1 month worth of trading. Pro tip: when you're recording a YouTube video, put your phone on silent. All right, so in the last 1 month, we have seen that he stayed well above around 250% every single day, which has been really exciting. Now, that chart I don't really like paying much attention to. I think more attention should be had on total income in the last 1 month. He started off with 30K, and then bang, lost money to 16K, brought it up all the way to 23K, and then bang, lost to 13K, and that happened around the final days of May, where there was that massive bullish move from Bitcoin, which brought the market all up together. Which was interesting. Predominantly trading Bitcoin in the last 7 days and the last 1 month, about the same as well. We had made some many losing trade in the last 7 days and also in the last 1 month as well. I used to think this guy wasn't pretty good, but upon further look, I have just a little bit of my own questioning, which is interesting. Now, looking into his orders right now, let's have a look at his history first of all. He makes some good trades, although he did make a loss. That I'd say that's more of a break even than a loss. But yes, we do see that he's actually made some pretty crazy, terrible trades in the 29th market. Now, it's interesting because he actually shorted at 28,948, and he actually got out on the $31,000 mark. Let me just think about what went through his head when he was actually doing that. So at $29,000 mark, this would have been the region that he has entered in. I think he has seen the price projection happen like so, and I thought he would have gotten in at this point thinking that it'll have a further downside. He may have entered at this peak or top up here, which in fairness was a touch in the RSI, because if you look at the same time that it touched the RSI like so, it did actually have a very, very bearish momentum, and the short position on that situation would have been correct to do so. But this particular trader, right, he actually trades quite a lot. Okay, this particular trader will trade like this. These all open on the 25th, right? 25th open 1, 2, 3, 4, 5, 6, 7. Yep, another 11. So that's 18 trades on the first day in 1 day. And then yet another 1, 2, 3, 3 trades that were open. So that's about 21 trades. So that's if you have a $10 trade or like $10 margin trade on every single one, that's $210 in that trade, and of course in that 1 day. And of course, and many of them could have stayed in the losses, which would have been quite crazy, right? So looking at that price action, that's what happened. I don't think he did a long switch when the price action then flipped over to the upside. A lot of traders did actually see this section here and may have entered into a yet another short position. However, they should have kept their profits nice and short, like nice and tight, because it only moved so little, and their entry should have been a lot more fine-tuned. However, I did see that this particular trader actually entered in here and then actually exited back up here, which was quite unfortunate to see. This particular trader trades quite a lot, so only put in a very, very small amount in the margin before you start going gung-ho, and make sure your account actually has quite a decent amount of fun before you actually get into it. This was an interesting move that we saw in the market, which then basically called out good traders from the bad traders. It seemed to me that though this particular trader, when there is some big volatilities in the market, he does have these moments of dips, right? So I think the 10th of the 5th and of course the 30th of the 5th, there were some big moves, and when those moves happen, then he did actually quite struggle a fair bit. So on those bases, I think this particular trader, I think trades quite a lot, and it's interesting to see a lot of profits coming into every day, but there will be times where you're just like, what the heck's going on? At the moment, the open trades that he has is just one open. He opened a short at 30,299, which got open, looks like today, and at 5 a.m. this is 3 p.m. where I'm right now, and the current price sitting at 30,533. Although these kind of trades, I think he could easily find an opportunity. Was that a short? I think that was a short. Yeah, that was a short. I think he should be able to easily find a time to escape that, because this is not a bad region to be in right now. Checking on the 5-minute chart, I think when the RSI is already dipped below, Potentially on the RSI trend, he might be able to find a profitable moment. But I'd say more on the longer time frame, you will find that no, the RSI isn't that high either. Maybe on the 1 hour chart. See, now we're just justifying a trade that he's made. But I think there should be some easily some corrections that are being made along the price action to be able to exit this particular position on a profit, which is ideally what you want to do. You want to exit your positions on a profit. So on this particular trader, I think there are times when he's actually trading quite well over a period of time, but when there's volatility, I think you need to keep an eye on your account so that you can manually exit out some of the positions and just take profit as and when you see them. Because let's be honest, even if you do copy trade, very few of you actually just let it trade. You probably keep an eye on it very, very regularly. And when you see all your positions in your futures section are all profitable, you can just press close all by yourself, and you can just, and that will put you in profitable position. There were times that happened to me as well, and that makes me go, I wish I exited out beforehand because I was actually profitable at that stage rather than being either losing money or in some worst cases being liquidated. Okay, so at the moment, I think he's sort of calmed down a bit. With this particular trader, I see him trading all day long. Literally, he's trading 24/7. So hats off to you for all the hard work that you do, but maybe look for better entries and better exits. With these kind of high frequency trades, just make sure that you are putting lower amounts of money so that your seed can actually handle all of his averaging and dollar cost, all those dollar cost averaging strategies. And of course, we're looking at the isolated margin, and I thought I'd just take a look at the difference between isolated and cross margin. I'm actually surprised that he uses isolated margin, and I think that's because his trade sizes are a lot more. He's trading each trade, as an independent trade of it in itself, which a lot of people then use isolated for. So what is isolated? In this mode, your allocated funds to a specific trade is at risk. When you open this trade in isolation mode, the position size is equal to the margin that you use. This means that in the event of a liquidation, you will lose the funds that you have allocated on the trade. In other words, whatever you put up is a margin at the risk. So however, a lot of the traders will use cross, and the margin that you use is basically kind of like your entire seed fund. The margin method is useful when using advanced trade management such as hedging, and increased margin allows for more flexibility and wiggle room. So that's why a lot of the traders that I find on BitGet copy trading are using cross margin, but this particular trader is using isolated as well, which are all worthwhile to note. So make sure you go through all the numbers. One of the best exercises that you can do is you can cross-reference the numbers as to when and where these trades are being opened and closed to see what kind of mindset these people are going through. Check out the RSIs on every single time frame, and of course check out some Fibonacci levels as well, which is quite interesting as well. As to the future movement of the market, I mean, I don't think it really matters to these guys as to what they think what's going to happen into the market, because all they're using are indicators to actually get in and out of positions. Of course, it doesn't make them always profitable, but it is there. I might even call it a bit of a short, like a mini short squeeze that's happening. A lot of the shorts did come in at these regions here, and so based on that, to actually wipe out all the shorts, the price actions went up twice. And so that has put quite a lot of money out of the market, and now the whales can then eat all that up, and all the shorts have gone, and once that's done, the whales are now recorrecting the price as well. As to the future movement of the coin itself, the outlook in a long-term basis is quite bearish. We do see a general downtrend for the longest time in the last, if we put it on the 4-hour charts. Our 4-hour charts are showing a general downwards bearish trend that we're seeing right now. And so based on that simple thought, I think a better position right now to be going for is of course in a short direction. So you will see a lot of traders actually take the short direction with some long trade positions that are forming right now as well. In fact, the $32,000 region here, it was actually a very, very good time for a short trade, and you would have made quite a lot of money had you had enough funds in there. So just be careful, just don't be greedy. I understand when you see a good trader and they keep making money for you, you want to keep increasing your margin. Like, my advice to you is that just kind of don't, because you want to make sure that you have enough funds, because should a black swan event like this happen, you are able to then average down and be able to secure your profits and maintain your gains, and also lock in all the profits that you're making. All right, guys, thank you so much for tuning in today. That is the update on this guy, youandneighbor.com. If you haven't started copy trading yet, check out bitget.com, as found in the description below. That way you'll support me in this channel, and of course that'll be a fantastic way for you to make some gains in this very tumultuous and very difficult time to trade right now. All right, much love to you all. Thanks so much for tuning in. I'll see you next video. Peace.